Now on this trade, I'm trying to get a continuation setup higher as I align on my narrative. We have seen a beautiful rejection of the sell side, an inversion fair value gap confirmed. I was late, I overslept, and I got to the chart missing the initial rally up. And if I was present, I'm very confident that I've gotten a rally up from the Reaper. So first presented fair value gap was perfectly respected. Look at the bodies, and it rallied above. And now at the 10 a.m. we're retracing into 15-minute price and basis and efficiency. That's why I wanted to have the silver bullet move higher, but unfortunately I was hesitant when it was trading there. I was trying to get consequent encroachment of the M15 BC. Alternatively, I was also looking at ideas to see it trade as low as the 50%, which is the equilibrium, so that I could buy in a discount between the swing low on this 1 minute time frame to the swing high. Unfortunately, that did not play out, and I find myself missing the entry into 15-minute buy and balance and efficiency. So when it rallies again on the high and forms this bullish order block, on a retest of it I'm buying, and I bought 4 contracts in line with the high time frame bias. My objective is just a bread and butter scalp. It's a very short setup. I'm looking to aim for my 26,123.75. I've been looking for that level for the whole week. That's been my draw on liquidity since last week. So I'm looking to trade to that level, and I see price disrespecting that bullish order block. It goes to the main threshold and delays there, so I take 2 contracts off. Taking those 2 contracts off is a cutting of losses, so I'm cutting my losses short, and I do that again right there when I see price trade to the main threshold, again cutting my losses short. So I'm out of this trade. Welcome to Tuesday's review. Going into this Tuesday, the bias is bullish, just like you saw on the forecast yesterday. So I'm expecting a rally to previous month's high, which is at 26,123 and 3/4. So out of the session, price has actually induced major sell side liquidity, major buy side liquidity rather, right here, and we see an anticipation on my path to run this high today is 26,046 and 1/4. And if we get this and there's momentum, I want to see 26,123.75 gotten today. Now today is the day before NFP, rather, why do I keep saying NFP? Today is the day before FOMC, Federal Funds Rate, FOMC statement. So it's probably like could be low probability, but judging by the daily candle at this point in time, we could see this run higher first, then the NFP comes and does something else. So those are the expectations going into the day, and I'm arriving at the chart a bit late though. This is 9:51. I'm looking at the daily chart, so the opening bar has already passed, and we're already seeing higher prices deliver as we speak. Now on the 4-hour time frame, I referred to this during the Monday's review and the weekly forecast. I wanted to see if this 4-hour buy and balance and efficiency stay open. It did. So I'm expecting low and liquidity run conditions because this has stayed open. So this is like a breakaway gap. This shows momentum to the buy side, and I'm looking for higher prices. I'm noting here this is the day before FOMC. This is a mistake. I meant FOMC. So the high time frame array of the session is this 4-hour buys and balances and efficiency. Price retraced into it during this 4-hour candle, and we see it being rejected. I want to see price head for 26,123.75. Just moving from the daily chart to the 4-hour chart, we have already swept the major buy side liquidity pool, and I want to see price trade higher to 26,123.75 today. Moving to the 15-minute time frame, look at regular trading hours. Your price opened here, so open range gap high is here, open range gap low is here. This regular trading hours on the 15-minute time frame, price opened, and look at that, it beautifully went down to open range gap, mid gap. So mid gap is perfectly hit, so the 70% probability of seeing mid gap hit is in the chart. Now it's rejected and price is moving higher to our objectives. We have buy side pools of liquidity above the marketplace. So I'm noting that the narrative is open range gap was perfectly hit at mid gap and rejected. So the work on the sell side is done. London session lows have been taken. The economic calendar had medium impact news. Thus, London session liquidity is a target, and at the same time we're dropping down into a 4-hour buy side balances and efficiency that has been really delivered. It was inefficient in buy side, rather it was delivered in buy side, inefficient in sell side. So we've delivered sell side, rejected it, and we're posting higher prices. Dropping down to our 1 minute time frame, you can see the 9:30 to 10 a.m. time period, 10 a.m. to 11:30 a.m. So this is the New York AM session. There's something I want you to note. Look at the bodies of this candle right here. Here and here, they are perfectly respecting constant encroachment of the first presented fair value gap after 9:30. So this is a ripper after 9:30 a.m. Why is this a ripper? This is the fair value gap that is formed with a sweep on liquidity. So this sell stops here, or this low is being run out while this fair value gap is printing. These two are within this bearish order block, so I don't consider this, and they're not wide enough. So this is wide enough and it displaces while sweeping liquidity. So this is the ripper for the session. Now price opens and trades down. Where is it going to? Open range gap, mid gap. Bodies respect it perfectly. We reverse from that level, and initially when I got to the chart, the first thing I opened was 1 minute chart, and I saw this candle right here closing above, and I was like, damn, that is a reversal coming right there. But without a high time frame perspective, I could not act on that information. So because I was late, and I was late because I slept off, or rather overslept and missed my alarm a bit. So price, as I saw, was trading above this CB. So there was an inversion fair value gap, and I could not get long because I had never gone through the higher time frames. By the time I got down to this time frame, you can see I'm taking this screenshot that this is one. Okay, this is in review. I'm taking this screenshot in review. But if you could look at the 15-minute time frame, I'm arriving 15-minute time frame at the silver bullet 10:03. So I'm arriving the charts around here, and we see this whole move has already happened at the time I was doing my top down analysis. So my idea going into the day was to look for a continuation setup. So I'm looking for continuation longs during the silver bullet hour, and I'm trying to look for them as close to equilibrium of this leg up as possible. And if you could trade right down here, or go to midnight opening price and 8:30 opening price, I'll give a good discount for buying. But then we want to stay in the upper half of this 5-minute PC. Price does come into the upper half, but I hesitate because I'm trying to demand mean threshold, or rather consequent encroachment and discount. EPNQ was willing to deliver it and retrace a bit deeper, but it did not. So I was hesitant here, and price rally took this high, formed this bullish order block, and that's where I was willing to participate. So I bought this here, and I wanted to see price move to the target cleanly. I saw this swift move up, and I was expecting more of it, but then price kept digging into mean threshold of this bullish order block. We see a stab at mean threshold. I was looking to see a swift rejection higher. It did not happen. We saw it consolidating. As it consolidates here, my stop was below this low. I kept just cutting my losses short, and I exited the position with a very small loss. Those are the habits of the winning 1%. The 1%, how they win and make it in this game is they keep their losses short. They exploit their winners, they believe in their winners, and they ride those babies higher or lower if they're shorting. So I was very mindful of high resistance liquidity run conditions coming to the market, because FOMC is tomorrow, and the day before FOMC can be very choppy. So I was being very aggressive with my trade management, and I cut my losses short. Eventually price rallied, did not hit the terminals in the New York AM session, but then that was it for the New York AM session. So in recap, we saw a 70% chance of mid gap of open range gap get hit. That was in the charts. Pre-market lows were taken right here, bam, and we saw a chase in self-delivery with a rally higher, inversion, respect of the first presented fair value gap. That stage a move to pre-market high that fulfills New York AM ATM model, and it was happening in a discount below midnight opening price and 8:30 opening price. If you should take one thing away from New York AM session, take away this reaper right here. First presented fair value gap, the way it was framed, bodies respecting mean threshold, reference to this inversion fair value gap, and what a beautiful rally to buy side. During the launch and New York PM session, we just see a massive consolidation. New York, the market on close macro did not do much, it just consolidated basically. So this is expected when we have a high resistance liquidity run, and a high resistance liquidity run usually comes before a big news announcement like the FOMC statement we're expecting tomorrow and the federal funds rate. So after that massive New York game rally, price just consolidates, and it consolidates right onto the close. This is building buy stops, more buy stops even at 26,123.75. So I'll be looking for that tomorrow. That's if we don't take it overnight, but I'll be looking for that tomorrow as we trade into FOMC. I'll wait for the FOMC to pass and then I'll engage in marketplace. That's it for this video. If you found this insightful, let me know below. Hit that like button and subscribe. Let's get this, and I'll see you in the next video.